Good evening and welcome to this session of the live coaching classes of the Institute of Board of Studies of the Institute of Chartered Accountants of India. So just looking at the query pad, we have Mr. Dhyanesh Shingle, Alok, Nikita Namal and Manoj Kumar Thakur. Welcome, sir, and others as they come in. Sahana Vavatu. Sahanau Bhunaktu Saha Vidyankarvavahai Tejasvinavadhitamastu Ma Vidvishavahai Om Shanti Shanti Shanti. Good evening again. Today we are going to discuss a wonderful topic, the Negotiable Instruments Act 1881. Very old enactment and still has some relevance, not too much. As we enter the era of digitalization, digital banking, internet banking, etc., and more importantly, GPay and other methods of online payment, I think the Negotiable Instruments Act is definitely losing its relevance. Nevertheless, it's a good law. It still has some connects with our financial system. Putting the Negotiable Instruments Act 1881 in context for you, so that you'll be able to appreciate much of it, and you'll also realize that much of these provisions may not have any meaning today. So breaking your head too much also may not be a good idea. One, two, you might want to understand the background so that when you come across a practical example or an illustration, you will know the context in which it was written. This law was drafted not by Lord Macaulay. Okay, not by Lord Macaulay. Macaulay, I think, can take credit for many laws, but not this. This law was drafted by another great Britisher called Lord Mansfield. Lord Mansfield spent a lot of time studying the customs and practices of the merchants who were trading on the Arabian Sea, the Gulf, as we call it. So they were trading between places like ports in Gujarat, Maharashtra, including, of course, then Mumbai, Surat, okay, and other ports, right down to the Malabar coast, right down to Kochi. These merchants were trading with the Gulf, that is your Bahrain or your Oman, one of the major ports, and other ports which are on the Persian Gulf, Arabian Sea, the Gulf. Now, this trade involved a lot of money in those days. But in those days, they did not have banking. They did not have banks as you know them. They did not have, shall we say, banks. For example, they didn't have State Bank of India or they had banks. Of course, the Britishers had a few banks, but those banks were more domestic in terms of Indian operations rather than suited for international trade and commerce. Even within India, there were the Indian merchants did not, like to keep their money with the Britishers. So they preferred indigenous bankers. So the customs and practices of these indigenous bankers in Mumbai and Gujarat were studied by Mansfield, and their counterparts in Oman and Bahrain, he studied them. And he realized that they had certain practices that were very strong. These practices were reduced into what then became the Negotiable Instruments Act 1881, when the British wanted to give a framework for this. The idea was very simple: to provide credit to trade. That's it. And to provide trust and confidence in the financial system. So the idea of the Negotiable Instruments Act was to provide trust and confidence to an already existing framework. See, the existing framework already worked on trust. Please understand that. The merchants and Shahs of Gujarat and the moneylenders already had a lot of trust, and their counterparts in Bahrain and Dubai and Muscat and other places already had a lot of trust going. They knew each other and they believed in each other, and a signature of your person that's it. Once he had signed a chitti and given it, that's the end of it. He will honor it. That's it. Or his estate will honor it. So the guy who got that paper from the Shah knew that this hundi was valid and that it was literally money. So the second tier money was created this way. Once the second tier money had come, the credit had come, there was a need for controlling it. Therefore, there was a need for a law. And that law was the Negotiable Instruments Act 1881. The law deals with negotiable instruments. There are three types of negotiable instruments, right? There are three types of negotiable instruments, right? I'm just getting the query pad right. Yeah, thank you for that greeting of Ramnavami greeting from Abdul. Thank you very much. And wish you, of course, happy and other greetings of the season of Ramzan. Okay, so good. I was actually today with a client. I'm not in Chennai now. I'm in Tanjore, and they had a prayer meeting. And because tomorrow is the beginning of the accounting year, so they had the Quran was being read, and I was there. And now I've come back to the room for conducting these classes. And wonderful. Thank you very much for that greeting, Alok and Abdul. Thank you. Okay, coming back to the point, there were three types of negotiable instruments. You have the promissory note, the bill of exchange, and the check. We are going to initially see the definition of these three, the nature of these three, and how they operate. Thereafter, we'll go into the life cycle of the negotiable instrument and how it finally gets discharged, right? What is a negotiable instrument? Okay, instrument you already know. You know what is an instrument because we studied it in interpretation, then in general classes. An instrument is any document that conveys a right or a duty. So the negotiable instrument also conveys a right to receive money and a duty to pay it. Shall I repeat? The negotiable instrument carries a right to receive money and a duty to pay it. It is negotiable because this right to receive money can be transferred. I will repeat. The right to receive money embodied in that instrument can be transferred. You might say, what is so great about it, sir? Friend, that is the whole point. Because you owe me money, right? You owe me money. Sorry, why should you owe me? I owe you money. So what I do, I say, I promise to pay you so and so on such and such a day, such and such a day, and I give it to you. Now you don't have money because I got your money, but you need money. Now what you do? You take the promissory note, show it to another person and say, hey, this is Srikant's note. Oh yeah, Srikant has signed it. Okay, I'm sure on the due date he will honor it. So that gentleman immediately gives you money and you give him the instrument. Are you able to see? The instrument has been negotiated. The instrument has been transferred. More importantly, the right to receive money from me has been transferred. And the duty to pay money on that instrument is not only to you, but to every person to whom you might have transferred it legitimately. That is all. You have understood Negotiable Instruments Act. So it's a document, a piece of paper. Therefore, it communicates a right to receive money and a duty to pay money. So one person has the right, the other person has the duty. Now, this right to receive the money can be transferred. How it can be transferred, we'll come to that. That is negotiation. Okay. But basically, negotiation means transferring the right. Later on, you'll find other names for it, like endorsement, etc., etc. But basically, it is nothing but the transfer of a right to receive money on an instrument or a paper. Three types of paper: promissory note, bill of exchange, check. Three different ways by which one person owes money to another and he acknowledges it, and that right is given to him in the piece of paper. And that piece of paper now capable of moving from one person to another, thereby creating second-tier money. Are you able to understand? You gave me 1 lakh. Now you are minus 1 lakh. You go to A, he gives you 1 lakh. You now have 1 lakh. I have 1 lakh. You have 1 lakh. See how second-tier money is created? Now he has that paper. That paper he gives to another person who has money, does not know what to do with it, to him, and that gentleman gets money. So the same piece of paper has created 3 lakhs where it could have been only 1 lakh in your hand. Of course, all this works on trust. Okay, this is indigenous banking. I just want to give you this background so that much of the mumbo jumbo of Negotiable Instruments Act, if you read it blindly like a textbook, you won't understand. Read it dynamically, in the context of commercial transactions, you will understand. The beauty of the negotiable instrument is it is expressed to be payable to a special person and does not contain words prohibiting its transfer. That is, it is transferable by endorsement and delivery. This transfer by endorsement and delivery is called negotiation. Negotiation is at the heart of this topic. So when I come to negotiation, we will spend a lot of time on this. Okay, now, negotiable instrument should be in writing. Oral, no. It should be signed, okay, by the drawer, acceptor. Signs are very important. Signature. It is freely transferable from one person to another. Whoever gets that instrument is called a holder. This is a very technical term. I'll explain more to you as we go into the topic. But right now, understand. If I am in possession, I am a holder. Please understand. Later on, we'll use words like holder, holder in due course, etc., etc. But right now, understand. Whoever is in possession is a holder. Whether he is holder in due course comes later. But right now, if I am having it in my hand, I am a holder. A holder is presumed to be a holder in due course. And therefore, the title is free. I have got it by normal, correct means. So I have the right. Because the minute you start doing this, then that document cannot be freely transferred. Therefore, they say a holder in possession of the instrument transfers it to another person. That person gets it free from defects. General rule, exceptions are there. We'll come to it. But understand the spirit of the topic now. Then we'll go into the details, right? So idea is money is owed, right to receive money, duty to pay money, expressed in writing, signed, freely transferable, negotiable instrument. It can be transferred any time, number of times till its satisfaction, no limit. Every negotiable instrument must contain an unconditional promise or order to pay. Unconditional. There should be no condition. Why? Because it has to be freely transferred. So if any condition is attached, that condition cannot be transferred to the subsequent transferee of that instrument, right? Instead of using the word transferee, transferor, etc., shall we use the word holder? So from one holder to another holder, it keeps moving, right? So the new holder should get it free. Free means free of any duties to perform anything. Once I pay you the money and take that instrument from you, I have the right to receive that money unconditionally from the person who has agreed to pay, who has signed it. The guy who has signed that instrument becomes the ultimate person who has to pay. And the promise or order to pay must consist of money only. Means it should be expressed in terms of money only. Means you cannot say 200 rupees and 2 goats. No. I promise to pay Ponnusamy 200 rupees and 2 goats. No. I promise to pay Ponnusamy 200 rupees. No. Anything other than money, no. The sum payable, the time of payment, the payee must be certain. The instrument should be delivered. Okay, means possession should be transferred. I cannot hold it on your behalf and you cannot have title. You should get it. I should hand it over to you. Possession is very, very important. Delivery is very, very important. Okay. These are certain presumptions about negotiable instruments. Until the contrary is proved, the following presumptions are made. Contrary can be proved, but until that is proved, I have every right to presume that the negotiable instrument was made or drawn for consideration. Means from your contract act, you know what is consideration. Quid pro quo. That simply I have not taken a piece of paper and written I owe you and given to you. That I received some consideration for which I wrote a paper saying I owe you. This is presumed. Tomorrow when you present it to me, I cannot say, no, I didn't get any money, sorry. Because you are entitled to presume that when I signed the pro note or accepted the bill of exchange, I had received consideration, presumption. As to date, whatever is the date bearing, that date was the drawing, or it was drawn on that date. No, that cannot be disputed. Every accepted bill of exchange was accepted within a reasonable time after the date of maturity. Acceptance not important. Don't worry about that. We'll explain it a little bit later. Transfer of negotiable instrument was made before its maturity, because after its maturity, you cannot present it for payment. Therefore, if I am holding it and coming to you, it was made before its maturity. Okay. We'll more about it when we come to bills presented after maturity. See, again, we'll come to it. When I come, I'll talk. Endorsements appearing upon a negotiable instrument were made in the order in which they appear. See, when you come to endorsement, you will understand it. The instrument is a piece of paper. On the reverse of it, I will write your name and sign. Then you will write somebody else's name and sign, and so on and so forth. So as we keep doing it, it gets endorsed and transferred, negotiated. When that happens, the order in which the endorsements are there is the order in which they were made. That is how it happened. So the line of liability will be clearly as available here is what we have to see. Okay. Parthatiji, don't jump the gun. And what do you mean by predated? There is nothing called predated. Not allowed. If you are asking a question, I am answering it. The concept of predated doesn't apply here. Date is the date. Unless you understand the subject, this question itself may not arise. So just wait a little bit for more knowledge to come to you before you ask this question. See, accommodation bill in India is prohibited. Okay. Accommodation bill in India is prohibited. But it is a valid, in those days, when the 1881 Act was there, it was very much allowed. Accommodation bills were very much allowed. They were the method of financing. That is how it used to happen. Okay. So, I'll explain to you. Accommodation bills were not prohibited in those days. Now, under the Reserve Bank of India, RBI Banking Regulation Act, accommodation bills are prohibited. Kiting is prohibited, criminal. You can't do it. Okay. So, it is not legal. Today, it is not legal. But when this act was originally drafted and passed, it was not wrong. It was not illegal. Why it became illegal, I'll explain to you. The system is a beautiful system. But because of fraudulent behavior on the part of people, those systems were stopped. But it was a beautiful system of funding and financing. But it was stopped. It is now prohibited. Don't jump the gun. If you wait for the knowledge to come, then automatically I will talk to you about accommodation bill also. As I already told you, the presumption is that the holder of a negotiable instrument is a holder in due course. Who is a holder in due course? If you know, don't put it here. I will explain to you. We come to the first of the negotiable instruments, a promissory note. Right? Promissory note. Let us first read the definition in section 4, then analyze it. Sir, if instrument is endorsed a number of times on the side, hey, why don't you wait, Pranav? When I come to endorsement, we'll take it up. What do you say? See, this, unfortunately, your institute material begins with all this. If I were allowed, I will go directly to promissory note and start. Why? Because this is all too early for you. Unless you understand endorsement, you cannot understand many of these presumptions. So wait for the topic, then you will automatically understand. Okay, there are 134 slides. We are now in 10. We have got a lot more time to go. Don't worry. If instrument is endorsed a number of times and the side before the paper already filled, boss, it can be filled. When I come there, I would have told you anyway. Now that you're asking, I'll tell you. You can attach one more paper. See, that back reverse side is filled. So your question is, and the side before the paper already filled, you can add one more paper and staple it. And that is called allonge. That additional paper is called allonge. Sir, you're writing exam. They give you one set of papers, answer book. That is over. What you will do? Huh? You will take additional sheet, na? Like that, you can take additional sheet here also. Such an additional sheet is called allonge. Okay. See, one thing I'll tell you. Give time before you ask questions. At the appropriate time you ask it, I will salute you and answer you. Right now, concentrate on definition of the instruments first. The 3 types of instruments, what they are and all. Okay. So, a promissory note is an instrument in writing, not being a bank note or a currency note, containing an unconditional undertaking signed by the maker to pay a certain sum of money only to or to the order of a certain person or the bearer of the instrument. Let's analyze it. Basically, a promissory note is an unconditional undertaking. Undertaking, promise, all are one and the same. So, promise, undertaking, one and the same. Undertaking means promise. Okay. Promise to pay. That is why it's called promissory note. I have taken 1 lakh from you, for example. Now, immediately I take a piece of paper. On that I write, I, Sridharan Srikanth, son of P.V. Sridharan, residing at number 4, number 3, whatever matters, blah, blah, blah. Hereby promise to pay, okay, or hereby unconditionally undertake to pay, rupees 1 lakh, a certain sum of money to Mr. Pranay Vasishta, whatever, Pranay Vasishta, on whatever, so 1st of May 2023, to Mr. Pranay Vasishta or to his order. Or to his order means what? I have taken 1 lakh from Mr. Pranay, but I have to pay it back to him. So instead of that, I give him a paper. Now, that paper, he can turn around and write in that Abdul and sign Pranay. Abdul waits till 1st of May and comes and shows me the promissory note. I have to pay Abdul because he is the order of Pranay. Means he is the person to whom Pranay has directed me to pay. I will pay. Now, in the meantime, Abdul can again transfer it to somebody else. Finally, whoever comes to me and shows the paper, my sign is there, the paper will be retired. I will take out 1 lakh, check. You do. Take a receipt from him on the promissory note received. That means the promissory note is cancelled. I will keep it safely with me. Bye. That's all. Transaction completed. Got it? So, to the order of or the bearer of the instrument, be careful. In India, though at the time of Lord Mansfield, we were permitting bearer promissory notes. Currently, no. Bearer promissory notes not allowed. Only one person can print bearer promissory note. That is the Reserve Bank of India. Nobody else can print. I will show you the bearer promissory note printed by the Reserve Bank of India. Nobody else can print a bearer or issue bearer promissory note. You cannot promise to pay to the bearer of the instrument. No. You can pay to the person who is named there or to his order, but not to the bearer. In India, prohibited. Why? Because that privilege is given only to the Reserve Bank of India. Nobody else can. Right, sir. So this is the specimen, right? This amount is for 10,000. 3 months after date. 3 months after date means April 10th. So, boss, there are some calculations and all. I will come to it. I will teach you. No, don't rush. I am going to teach you. This 3 months calculation is there. Grace days and all are there. We will come to it. Right now, 3 months after date means April 10th. 3 months after that, I promise to pay Sri Ramesh or to his order. Means anybody to whom Ramesh writes the name. Ramesh, Ram has to pay 10,000 to Ramesh. Now Ramesh transferred it to Suresh. Suresh signed Ramesh. Then Suresh transferred it to Mahesh. Signed Suresh. Finally, Mahesh comes and presents. Ram has to pay him. So long as it is paid 3 months after date. Anytime after 3 months, he can come and take that money and go. Okay, but not before. I promise to pay so and so. For value received means what? I have received consideration, whatever it is. Value received means some consideration has happened for this. So this is a promissory note. Is it unconditional promise? Yes. I promise to pay. Is it payable to order? Yes. Is it for value received? Yes. Is it a certain sum of money? Yes. Is it payable on or before a certain date? Yes. Okay. Agreed. That's all. Now, you can ask me, now I will come back to that. What is the meaning of predate here? Nothing. On the date when you give the promissory note, that is the date. So there is no question of predating it and all here. But one more thing, why somebody will predate it? I will not predate. Why should I? When you're asking me to give a promissory note, I put today's date only. But sometimes what can happen now? People give blank pro note and all. That's a big thing, not a good idea. Then what happens? You put some other date and take it there. I will deny it. It will become a big court case. Better if you are writing a promissory note, put a date on it. Okay? And then say, in case I owed you, can I endorse it to you? I owed you. Okay. Sir, I have accepted to pay. Abdul, you owe me money. Then why am I giving you pro note? So simply for asking question, don't ask question, Abdul. If I owe you money, I will give you pro note, right? If you owe me money, you will give me pro note. It seems that you are owing me money, I'm also owing me money. We will cancel the account and go, yeah. Why am I giving pro note to you? Why are you giving pro note to me? Boss, you are confused. Don't confuse me. I owe you money, I give you pro note. You are telling now that you owe me money. Why you are having my pro note? You hand over my pro note. I will leave you, cancel the debt and go. That's all. Matter over. Boss, common sense. Back to common sense. Abdul, in between you started gaining common sense. Again, you're going back to the bad old ways. Don't do that. Sir, check pre-date, post-date. You will come to check at the time. Adu, what is pre-dated check? Sir, you date a check, boss. Post-dated, I can understand, boss. I don't understand pre-dated, boss. But I'm sitting now on March 30th. I'm issuing a check dated March 27. What is the big fun in that? I don't understand. But if I give you a post-dated check, there is some logic in it. What is the big deal in pre-dated? I don't understand. Because anyway, you can present it only today. So seriously, I'm not able to understand this pre-dated concept. See, stamp paper, etc., can be pre-dated. For example, a partnership was entered into earlier. We can have a pre-dated. We can say, though we are signing it today, the partnership will come into effect from an earlier date. We can say like that. That is called pre-dated. But check why I should how I will pre-date it. I don't know. See, for example, you meant to say I will put a day before yesterday's date. You will be the loser, na baba. Because the life of the check will become less now. Why you are taking pre-dated from me? I'm seriously, I don't understand. You understand? Parthasarthiji, why you will pre-date? I'm giving check today, 3 months validity. Why you will pre-date it, boss? Take it today. You take it post-dated. Sorry, maybe I am foolish here. I don't understand your question. I'm very sorry. Okay. Promissory note drawn by, and we'll come to that. Sir, in your example, you said you owed to Pranav and he has given to me. And I owed you. Oh, then be clear. See, now only the question is clear. Okay. Boss, I owed it to Pranav. I gave him a promissory note. Okay, correct. Now he has given it to you. Come and take it from me. Who's preventing you, Abdul? You come and ask me, I'll give it to you. On the date you come, I will give it to you. Definitely, I'll give it. That is not anything wrong. I thought I owe you money, you owe me money. I gave you a pro note. Why can I give it back to me? Why I will take my own pro note? Yeah, as well I'll cancel the debt and go. You take your money, I'll take my money. Go home. Netting off is allowed anyway in commercial transactions. Anyway, the person who makes the promise to pay is called the maker. He is the debtor, as rightly pointed out by Sunil Kumarji. Customer. Don't use the word customer. Huh? Use the word debtor. You are using the word over. Not a nice word. I'm not saying it's not a word in English. Person who owes is an over. But debtor makes a better sense. Huh? Debtor. The person who owes money is the debtor. For example, I have sold goods to you. You have received goods. You are my customer, as you say. You are my debtor. You will give me a promissory note. You are the maker. In fact, that promissory note in indigenous language in India, it used to be called hundi. The word hundi. Okay. So I sell goods to you. You accept the goods. Now you owe me money over, by your own terminology, you are over, my debtor. So you will give me a promissory note. That's it. On the date I present the promissory note and take it. But that is not why I take the promissory note from you. The minute I get the promissory note, I will run to my banker, Mr. Shah. I will present your promissory note to the banker. Banker will look at it. Who has given the promissory note? Sunil Kumar. Wow. I know Sunil Kumar. Very, very, very well-known gentleman. Good trader. I know that he is an honorable man. So immediately he will discount it. So, of course, he needs his income now. So what you do? You have to give me 1 lakh. He will immediately cut 5% on that. And he will take 1 lakh 5%, 5,000 rupees. Correct? 1 lakh? I'm very weak in maths here. Okay, and he will give me the balance. I will take it home. I will buy more goods. Again, I will sell to somebody. Are you able to understand? In the meantime, on 30 days later or 60 days later, the Shah will present it to you, Mr. Sunil Kumar. You will pay him. That's all, matter over. It's a wonderful, way of doing business. Now, however, Indian businessmen, especially the highly intelligent Gujarati, Parsi, and shall we say, I should say Gujarati Parsi. Parsis think of themselves as Gujaratis only. So Gujarati, to an extent Rajasthani, and merchants were so intelligent. They had created such a beautiful system of finance, okay, which was vibrant for 200 years. And the British themselves could not touch it. In fact, so much so that Lord Mansfield had to take lessons from us and draft this law. Okay, Lord Mansfield used to sit in coffee houses in Oman, in Bahrain, okay, and in Mumbai, Surat, and he used to listen to the merchants and how they traded, and he used to learn from them, and that is how he drafted this. Which is why most of my examples and stories I will tell only from this part of our life. Okay. Payee is the person to whom the amount on the note is payable. Payee. Okay. You are aware. I don't have to tell you. So as rightly pointed out by Sunil Kumar, the maker is the debtor or the customer. The payee is the creditor or the supplier. So in the promissory note, the relationship between, listen to me, let questions come later, listen to me. In a promissory note, the relationship between the maker and the payee is customer and supplier, buyer and seller. Buyer gives the promissory note to the seller who supplies goods or services. Instead of paying money, I give you a paper. But that paper is very valuable. That paper gives me time to breathe for 30 days and gives you the opportunity to take money from the Shah and go on and do your business. So in a way, we were encouraging business. Got it? So we already saw in writing, express promise. It should not be implied or mere acknowledgement saying, I confirm that I have to pay. No, I promise to pay. The promise to pay should be definite and unconditional. You can't contingent contract in it. You can't say, in case it does not rain on Wednesday, I'll pay you. Sorry, that's not a valid promissory note. Or I promise to pay you 5,000 rupees if I am able to harvest my land. No, that is not a promissory note because it is not unconditional. If the minute the word if comes in, conditional. You have to take if out of it. No ifs and buts. Okay. But however, the promise to pay may be subject to a condition which according to ordinary experience of mankind is bound to happen. For example, Diwali day is a known day, or Amavasya is a known day. Full moon and new moon are known days. You can say, I promise to pay. That is not conditional. I promise to pay on Purnima day. You can say, Purnima will come. So there, it is not conditional. But even then, conventionally, my dear friends, we don't put any conditions on it. Okay. See, for a long time, even now, hundis are used even now in bank finance. For example, once you sell goods to somebody, immediately you send a hundi. Along with the bill, you send a hundi. Okay. Or rather, he sends the hundi and sends it. Or you may send a bill of exchange, he'll accept it and send it back. We'll come to that later. Or he may send a promissory note. Now that promissory note, immediately you will take it to the bank. Even now, that is called inland bills or domestic bills, bill discounting. It's still there. Banks are still financing based on bills. Hundi, it's called hundi. That promissory note is called a hundi. Okay. At last, we have Suprada back. Welcome, madam. Thank you. Can the promissory note be transferred? Ahmad. That is the whole point of a promissory note. It is capable of being transferred. It can be transferred any number of times till its satisfaction. All the three types of negotiable instruments can be transferred. That transfer is called negotiation. The process by which the right to receive money on a promissory note is transferred is called negotiation. Another name is called endorsement. What is being transferred? Hey, that piece of paper, what is the use of transferring? That piece of paper contains a valuable right to receive money now. That right to receive money can be transferred. you able to understand? So I hope I have answered your question. Sorry, sometimes the way I answer will be very excited, because though I am 57 years old, my blood is still hot. I'm still feeling like I'm only 25 years old. So sometimes I'll speak very excitedly. Don't get upset. Okay. A promissory note must be signed by the maker. Otherwise, it is incomplete and ineffective. Unsigned promissory note, what do you do with it? Okay. It has to be promised to pay money, promised to pay a certain sum. Maker and payee must be certain, definite, and different persons. Maker and payee must be certain, definite, and different persons. Promissory note cannot have the same person as maker and payee. And even if he is onion, schizophrenic, imagine, only then he can do same person, maker and payee. Is it mad or what? Huh? Okay. So he is making payable to himself. It should be different persons. Okay. The reason is you cannot make it, you cannot write a promissory note, sign it yourself and make it payable to yourself, and then go to the banker and get it discounted. Therefore, they say it must be the same. A promissory note cannot be made payable to the bearer. Section 31 of RBI Act. Friends, please note it. It's not in the Negotiable Instruments Act. It is in the RBI Act. A promissory note cannot be made payable to the bearer. Only the Reserve Bank of India or central government can make or issue promissory note payable to bearer. You can see the promissory notes payable to bearer. It is on top. You can, if later on you expand, you can see, you can yourself take out a note in your pocket and then see. You will see there, I promise to pay the bearer a sum of rupees 500. Who has signed it? The Governor of the Reserve Bank of India. So then, other than 1 rupee note, you will not find that promise on 1 rupee note. Kyun? Because the 1 rupee note is printed by the Government of India. Today, you won't have 1 rupee notes. This 1 rupee note is a photograph of 1 rupee note on my table. I have 2 1 rupee notes on my table, okay, which are under the glass in my executive table in my cabin. Under the glass, I have glass on my cabin, and under the glass you will find 1 rupee note. 1 rupee note this side showing Gandhiji's face, the other on the reverse side. Many people ask me why you have 1 rupee note in your one, because it's very rare. It's a very rare note, so I have laminated it and put it there. Secondly, it reminds me of the value of 1 rupee. 1 rupee is not a small amount. Even to earn that 1 rupee, I have to sweat. I have to struggle. So it's a lesson to me to be careful with my money. And that lesson, somehow by the grace of God, both my children have learned. Every time they saw the 1 rupee note, they know. So 1 rupee doesn't come easily. Okay, both my children earn money, and they know that it is difficult to earn. They know that I have a lot of money, but they don't want it. They want to earn their own money. And they know how difficult it is to earn 1 rupee. And that 1 rupee, as we keep on earning more and more, it multiplies. And the value of money is what I keep remembering whenever I see this 1 rupee note. And I am reminded, hard work, sincere work, smart work is the only way. And every 1 rupee earned, I have to protect. Okay, sorry for this lecture, but think about what did Lord Krishna say? Ananyas chindayanto mam, ananyas chindayanto mam, ejana faribasate, tesham nityabhiyuktanam, yoga kshemam vahamyam. Of course, you ultimately trust in God. Yoga is earning, kshema is protecting. Both are needed. So, and that is what you are going to become. When you become members of our institute, you are going to help your company to earn money, okay, and also to protect that money. So remember it. When you see this rupee note, never forget that you are the person who is going to help the company to earn and also to protect. Ensure that it is not wasted. Okay. So coming back to the topic, only the Reserve Bank of India can give bearer promissory note. If you give bearer promissory note, you'll be violating section 31 of the RBI. Chalo, sir. I'm sure Abdul has a question for this. Let us see. Sir, person, you go to your General Classes Act, not defined here. So if you have a doubt, you go to General Classes Act. Person includes company also. So not as defined in Income Tax Act. Not defined in this act. So you go to General Classes Act. You remember in General Classes Act, we defined a person, right? All currency notes are not pro notes. Up to from 2 rupees onwards, pro notes. Now you don't have 2 rupee note. Straight away 5 rupee. Even note 5 rupee note you don't have. Only coin. All those are government. All coins are minted by the government. So I can say from 10 rupee note onwards is a promissory note. The new 10 rupee note onwards, right up to 2000 rupee note is the promissory note. Yeah, Pranav, I know that you have. You already mentioned once that you have. And what you have must be an even older note than mine. Because there are some old notes my grandfather used to have. Unfortunately, my grandmother spent it off without knowing the value of that. She spent it off. When my grandfather passed away, he spent all that money. Okay. So we knew that she had that 1 rupee bundle. She spent it. When she went to temple and all, she gave to beggars and all, she gave that 1 rupee notes. Stamping. A promissory note must be properly stamped in accordance with the provisions of the Indian Stamp Act. Means, and must be duly cancelled. Okay. Each state has its own stamp. I'm sorry. Promissory note is a central subject. Sorry. You have to go for the Central Stamp Act. I don't know what the stamp is here. Seriously. I don't know what the stamp is. It must be 10 rupees or I don't know. Okay. Sorry. Don't ask me. I don't know. I'm sure I can find out and tell you. But once again, sorry. I'm just going back to very bad. But it has to be stamped. Sir, all currencies in the world are pro note. No, sir. No, not really. I've got a lot of currencies. I'm yet to see. Singapore, I think, is a promissory note. But I doubt if all are promissory notes. US dollar is a promissory note. It's signed by I think what is that bank? What bank is that? Federal Bank that he's signed by the governor. So I don't know, sir, honestly. I'm not an authority on that. What is your problem? Are you going to, when you go abroad, you use it? It's a promissory note or not? What is that? See, the idea of the promissory note is very simple. The government took over from the Shahs. See, the Shahs, the Gujarati moneylenders, they were creating money literally by issuing promissory notes. See, when a Shah issues a promissory note, that is money. So Shahs used to create money in those days. There was no prohibition on bearer. So they used to give. So, and that used to be traded. And so, for example, and when you come to bill of exchange, you will understand it better. So-called accommodation bills. They created second-tier money. But after the government of India came, they realized that this is very dangerous and could lead to frauds. Therefore, they said, nobody will issue bearer promissory note. We will issue it, and they called it the currency notes, which we use. Theoretically speaking, for every promise that they have made, they should be having gold. But no government in the world has gold. But if you look at monetary theory, currency theory, all currency notes are basically promises to pay by that government, either by the Reserve Bank if they have one, or by the government itself. So that if you go and present the currency, the government should be able to give you gold, equivalent gold. That is the promise. But that gold standard is not there now. It's gone. Long ago it's gone. Okay. Bretton Woods, it destroyed it. Post World War II, the gold standard was abolished, and government started printing notes left, right, and center. So a promissory note must be properly stamped. So here are some examples. I promise to pay B or order rupees 500. Is that a correct promissory note? I acknowledge myself to be indebted to B in rupees 1,000 to be paid on demand for value received. I acknowledge myself now. So the minute I say acknowledge, to be paid on demand, so he is unconditionally promising. So though B is a little bit of Shashi or English, still it is a promissory note. Mr. B, I owe you. Sorry, it is not a promissory note. It only says I owe you. It does not contain an unconditional promise to pay. Got it? So C is not a promissory note. No. Payable to bearer means it will be paid to any person who is in possession. Stamping has nothing to do with. Even a bearer instrument has to be stamped. Okay. Why is currency note not stamped? Because it is printed by the government of India, madam. So don't ask me that question. So even if it's a bearer pro note, it has to be stamped. Stamping is not excused. Bearer instrument means it can be claimed by a person who is in possession. His name will not appear on the instrument. When I come to check, you will understand it better, because check alone you can issue bearer checks. Only check is allowed. Bearer checks are allowed. Okay, I promise to pay B rupees 500 on all other sums which shall be due. This is not certain. What are the other sums due? We don't know. So therefore, D is not a promissory note. I promise to pay B rupees 500 first, deducting thereof any money which he may owe me. No. See, I don't know what, when I'm taking this from you, I don't know how much I'm going to get here, because what is the amount that he owes you? I don't know. Okay, so again, E. I promise to pay B rupees 500 7 days after marriage with C. Sorry, no. Marriage with C and all, how can I know? C should be alive. C should be willing to marry. No, it is not a pro note. Just give me 1 minute, sorry. I'm so sorry. I promise to pay B rupees 500 on D's death, provided D leaves me enough money to pay that sum. Conditional, no, it is condition. Provided D, if provided is equivalent to the word if D leaves me enough money. Sorry, no. I promise to pay B rupees 500 and to deliver it to him my black horse. I told you no horses and goods. Okay, only money. So A and B are promissory notes. C, D, E, F, G, H. Why they are not promissory notes also we have seen. Okay. Why D is not? Because it is not, see, we said it should be a certain sum of money, right? That way D and D are similar. Both D and E are similar, because both talk about all other sums, any money. So we do not know how much. Therefore, the 500 rupees is not the certain sum, because at that time when I present, he may be due more. I don't know. So D and E are not promissory notes, because the amount is not certain. B, because it is not an unconditional promise to pay, it is only an acknowledgement of debt. D and E, because it's not a certain sum of money. Okay. F, because it is conditional on certain event which is not certain of, we don't know for sure. D is again, G, death is not a problem. D is death, provided D leaves me enough money. See, you can say I promise to pay B rupees 500 on D's death. Why? Because death is certain. Death and taxes are certain. But you cannot say if D leaves me. That problem in G is if D leaves me money. That has made it conditional. Okay. Good. H, of course, is some certain sum of money and money only. Whereas here black horse is also included. Therefore, not. We move on from promissory note to another type of negotiable instrument called bill of exchange. Right? A bill of exchange is an instrument in writing containing an unconditional order. Are you able to see the difference? That is an unconditional promise, whereas this is an undertaking. This is an unconditional order. I am directing somebody to pay. There, I am the maker. I am saying I will pay. I am undertaking to pay. Whereas in bill of exchange, I am the maker. I am directing. I am giving an unconditional order to somebody else to pay. Signed by the maker. Directing. The maker is directing a certain person to pay a certain sum of money only to or to the order of a certain person or to the bearer of the instrument. Right, sir? So, promissory note, कितना पार्टी है? 2. Bill of exchange में कितना है? 3. Who are they? Maker, who is giving a direction to a person who is called the drawee. The maker is called the drawer. He draws the bill of exchange. On the drawee, let me see if I have a picture. Yes. See, look at this. Ram is the drawer. Okay. Ravan is the drawee. Means Ram is drawing a bill of exchange on Ravan. Why? Because Ram has sold goods to Ravan and Ravan owes money. Are you able to understand? In the earlier example, the maker in promissory note was the debtor, whereas the payee was the creditor. Here, the drawer is the creditor. The drawee is the debtor. Reversal of roles. So Ram is the debtor. Ravan is the creditor. Now Ram directs Ravan. Pay. The direction is sent to Ravan. So that bill of exchange is accepted by Ravan. Yes, I accept. On acceptance, Ram delivers it to Lakshman. Or Lakshman may be given that instrument by Ram and Lakshman presents it, also possible, but we won't bother about that. That is not important for your syllabus. So assume that Ravan accepts and sends it back to Ram. Now Ram gives it to Lakshman. He is the payee, third party. So Ram is the drawer, the maker of the bill of exchange. Ravan is the drawee, the person directed by the drawer to pay. He is the person to whom the bill is drawn. Then the payee. He is on acceptance, he is called acceptor. Till acceptance, he is called drawee. Please understand. Once he accepts it, he puts his signature on it, he becomes liable. Please understand. If a bill of exchange is not accepted, who is liable on it? If this bill of exchange is not accepted by Ravan, who is liable on it? Ram. Because ultimately Ram owes money to Lakshman. In this example, Ram owes money to Lakshman. Ravan owes money to Ram for the goods. Ravan doesn't accept. Ram still continues to owe money to Lakshman. That money he has to pay. But if Ravan accepts it, then Ram is released. Lakshman has to go only to Ravan. He will present it for payment. Ravan, being an honorable man, will pay it and the bill will be settled and closed. This is the cycle of a bill of exchange. Right? If you understand it, much of bill of exchange is clear to you. But if you want to confuse yourself, I cannot prevent you. Are you able to understand? If you still want to confuse yourself, you are at liberty. But clarity is there in front of you in this diagram. Correct. Ram is liable. Oh, not bad. Not today is Ram Navami, whatever. So we are talking about Ram. At least Ram Nam has come in our mouth. What do you say? Even as an example for bill of exchange, I have told Ram Nam many times today. Unknowingly, like Valmiki was an uneducated hunter, thief. And he was told to meditate by Brahmaji on Mara. He kept on saying Mara, 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 Mara. Automatically it became Rama, Rama. Okay? Like that, like a fool and an idiot who has no knowledge of religion or bhakti, true bhakti. Okay, I have somehow uttered Ram Nam. Even for me, there is salvation. You are all devotees. You are really praying. I'm not a devotee, but I'm telling Ram Nam, that will give me salvation. That is the belief that is more important. Without belief, if you tell Ram Nam, what is this? With belief, you have to tell Ram Nam, even 2 times it is enough. Ram Bhajan and all, you need not do. The person named in the instrument is the payee. So it's clear. It must be in writing, must contain an express. Express means in writing, clearly stated. It should not be implied. It should not be hidden. It should be open. An express order to pay in writing. It must be definite and unconditional. Drawer must sign the instrument. Again, note it. Come to the definition. A certain sum of money only to or to the order of a certain person or to the bearer of the instrument. Right? So, drawer, drawee, and payee must be certain. All these 3 parties may not necessarily be 3 different. For example, you can be drawer and payee. One can play the role of 2, but there must be 2 distinct persons in any case. You can't be all the 3. See, you might be like Kamal Hassan trying to do 10 roles and all, but in this case, you can do only 2 roles. You can be either drawer and payee. Okay, you can be drawer and drawee. In which case, you know what will happen to that bill of exchange? It will become a promissory note. Are you able to understand? Suppose Ram is drawing a bill on himself, accepting it and giving it to Lakshman. It is nothing more than a promissory note. Are you able to understand what I'm saying? That's all when you do that. Similarly, Ram can draw on Ravan and he can be named as the payee. Nothing wrong. Thereafter, Ram can endorse it to other people. 2 roles can be played, but not all the 3. Okay, not all the 3. Got it? Again, As per Section 31 of the RBI Act, a bill of exchange cannot be made payable to bearer on demand. Bill of exchange cannot be made payable to bearer. Agreed. Exception check. Check is also a bill of exchange, but under the Banking Regulation Act, it can be made payable to bearer. They are specifically permitted by the RBI. Other than check, no other bill of exchange can be made payable to bearer. Okay? Because it has inherent problems in a country like India, where, see, identity is not known, money laundering becomes easy. Why do you think we have so many elaborate KYC norms? Know your customer, know your... Why? Because we want to know the identity. So identity becomes very important. Therefore, we have not got a matured, financial system where we can allow bearer instruments. Got it? Yeah. I read a very nice story today. Quickly, I'll tell Ramakrishna Paramahamsa's story. There was a Panditji, who wanted milk. The girl who supplied the milk used to come by the boat across the river. So one day she came late. Panditji got angry and he said, Panditji, boat came late. What can I? Don't talk about boat. Chant the name of Ram and you will cross the river and come. Next day she came at 5 a.m. in the morning. Panditji asked, the boat has not come. How you have come? Panditji, I chanted Ram Nam and I came. Don't tell lies like that. Girl, when she chanted Ram and she started walking, Panditji said, I am such a great devotee of Ram, I will also walk. So he started walking, but he was more concerned about the silk dhoti. So he tried to lift it. He was worried about the dhoti. So he forgot to think about Ram. Okay, very beautiful story of Ramakrishna, which I thought I will chant, which I will share with you. I know it is out of syllabus. Sorry. Still, I thought I could. Belief is more important, okay, than the outward show of devotion. The sum must be certain. The order must be to pay money only. It must be stamped. Stamping is under the Central Stamp Act. It is fixed. Okay, I am not aware. I think it is 5 rupees. I am subject to correction and it's not relevant. The day when you have to stamp it, don't worry, go to Google or ChatGPT or whatever is that artificial intelligence will guide you and that will tell you what to do. Don't worry about it. So we have analyzed this diagram. Keep this diagram in your mind so that whenever you have a problem in bill of exchange in the exam, don't put the problem into this format. I will also be showing you another little more complex format. Any problem, any illustration, put it in this format, everything will fall in place. Okay? Automatically, you will get the answer, you will get the logic. What if at the last, the bill of exchange comes to the dry? Why not? We'll see that later also. It will be good. That's all. If it comes to dry, he'll keep it in the safe and be happy. That's all. Cycle the name. I owe you. For example, you owe me money. Sorry, I owe you money, right? I give you a promissory note. You get the promissory note to somebody. Finally, it comes back to you. Close. That's all. It comes back to me. That's all. Enjoy. I will keep the promissory note safely because I don't have to pay to myself now. Okay, means that cycle is completed. If you draw the diagram, you'll find one full cycle, it will come back. It will come back. Okay, right? If bill of exchange is there, what is need of promissory note? Friend, they serve different purposes. 1. 2, today I will agree with you, sir. In a way, I will agree with you, Dhyanesh. In a way, bill of exchange is losing its significance. Though promissory notes are still valid. Promissory note is still used. For example, if you borrow money, okay, if Mr. X borrows money from a bank, along with the other documentation, the bank will insist that he should sign a demand promissory note. It is called DPN. When you go for bank audits, you have to verify DPN. For every loan, there should be a demand promissory note, and that DPN should be valid because the time period of limitation for a promissory note or any promise, any contract is 3 years. So the date of the demand promissory note, from that date, you can file a suit only within 3 years. So you should, when you're auditing a bank, every loan, you should see the DPN, whether the demand promissory note is within the time. So promissory notes are still used, but bill of exchange, to my knowledge, slowly it is losing its significance. I don't know. But still in commercial transactions, what we do, when I sell goods to you, I will send the invoice now. Along with the invoice, I will send you a bill of exchange. Draw the bill of exchange on you. Okay, because you owe me money now. So if you accept it and send it back to me, I'll go to my banker and endorse it and what shall I say, discount it. So to that extent there. So you can do the same thing with promissory note also, but still they use bill of exchange for that. Okay. So they perform two different roles. Therefore, they still survive. But I do agree with you that bill of exchange is slowly losing its, life. When the condition is favorable to write, no conditions, favorable, unfavorable, because remember, madam, ultimately this piece of paper is going to become public. Anybody can get hold of it. So nothing, no conditions, please, no conditions. You can only put, I'll see if I have a format. You can only say, I hereby direct you to pay a sum of money, X amount, 1 lakh to so-and-so, or to his order. That's all. Anything else, if you put, it's not a bill of exchange. Okay. Moving on. Essential characteristics, we are saying difference. Basically, definitions are different. I'm not going to read the definition again. Based on the definition, this is a promise to pay. That is an order for making payment. 3 parties in bill of exchange, 2 in promissory note. We already saw that. Promissory note does not have to be accepted because only 2 parties. I sign and give it to you, you take it and run. Whereas bill of exchange, I send it to you, you accept it only then. Only when the drawee accepts it, it gets life. So bill of exchange gets its life only on acceptance. Otherwise, it's a piece of paper. A promissory note cannot be made payable to bearer. Bill of exchange can be payable in the case of check. Okay, only check. That brings us to the last type of negotiable instrument, which is check. Check is something you are familiar with. But believe me, slowly, the check is also going to die. Check as an instrument will die. Why? Because we are so used now to making payments online, instantaneously. Early, but still, check is a nice way of delaying payment. See, when post-dated check. Now, see, Parsatiji, why are you telling pre-date? Give post-dated check. That is fun. Okay. For example, I have to pay you on 15th of, I have to pay you some money. You come to my office. You keep pressuring me. See, Kanji, you give payment. I said, I'll give you a check. Give me a check. I write out a check. Then I put 15th April and give it to you. What is this? No, Baba, you wait. If you want, you take the check. Otherwise, even that, you are thinking, at least this piece of paper is better than promised orally by that fellow. So you take the check because at least you're hoping on 15th of April, you can put that check in your bank for collection and get money from me. I will call you on 14th night or evening and say, you know what, Parsadiji, don't present the check tomorrow. Present it. I will tell you when to present. Product. I'll keep the phone. This is, sorry, I'm giving myself as an example. But many of my creditors are rascals. They do this. They'll call me. Srikant, the check, don't present it tomorrow. Hey, you told me to present it now. No. Just give me 2 days. I will call you. This I will call you business I hate. When you will call, when I will present the check, when I will get the payment. So check is a beautiful way of torturing people and not giving them money. Instead, give them a piece of paper and say, go. But don't worry, there is a remedy. At the end of the session, tomorrow evening, last slide, I will tell you how you can punish those guys who are giving checks and delaying. Okay? So post-dated checks are one fun way of irritating and torturing people. So Patsartiji, instead of pre-dated, go for post-dated. Okay? A check is a bill of exchange. So check is a bill of exchange drawn on a specified banker. See, normally bill of exchange can be drawn on anybody. But check is a bill of exchange drawn on a specified banker and not expressed to be payable otherwise than on demand. Okay? Not expressed to be payable otherwise than on demand. It should be expressed to be payable on demand. Double negative. Not expressed to be payable otherwise than on demand means you cannot make it payable later except a post-dated check. But whatever it is, the date put on the check, on that day the banker has to pay on demand. check is payable on demand. When presented, it has to pay. Okay. Whereas any other bill of exchange can be expressed to be payable otherwise than on demand. Later on, we're going to see that. Certain bills of exchange may be payable after sight, 30 days after sight. But check cannot be expressed as payable otherwise than on demand. Means it cannot be expressed to be payable after sight. This may be a little difficult to understand. I'm repeating it. Even Vedant Vora is not here, but even though he's not there, I'm repeating this. Normally, bill of exchange can be expressed to be payable after sight or at sight. At sight means on demand, on presentment. After sight means a certain number of days after the drawee has seen it. Okay, drawee saw it, accepted. From that day, he has 30 days. That is called expressed to be payable otherwise than on demand, after sight. So normally bill of exchange can be after sight, but check cannot be expressed to be payable after sight. That is otherwise than on demand. It has to be payable on demand. On the day mentioned there, on presentation, it has to be paid. Got it? I know this part is a little difficult to understand. I wish I could have taught you after sight and all, but now, okay. Now, it includes the electronic image of a truncated check and a check in electronic form. We'll see the definition when I will explain. These amendments came in 90s. This definition was amended. Section 6 was amended in the 90s. I forget exactly when. Around 99 or so, it got amended. 95, 96, it got amended. Why? Because by then, I'll come to that. When I come to electronic image of truncated check and check in electronic form, I'll explain to you. Expression banker includes any person acting as a banker and any post office saving bank. Okay. Earlier, till 1950s, 55 and all, even individuals could be bankers. Gold merchants were called bankers. Pawnbrokers were called bankers. Money lenders were called bankers. Banker's license was called. But once bank nationalization happened, they said no. Only bank means bank registered, scheduled bank, which is registered with the Reserve Bank of India, licensed by the Reserve Bank of India. So private bankers are not allowed. In those days, when this act was passed, you had private bankers. Okay. Even now, in some money lenders and pawnbrokers, you will find so-and-so, Tiwari, banker, like that. Why not? They are not bankers under now. But in those days, they were also called bankers. In fact, there is a Parsi name called banker. It's a Parsi surname, banker, because he was a banker. Therefore, he was called banker. Okay, like that. Okay, so that is also quite possible. Right. Payable on demand means it should be payable whenever the holder chooses to present it to the drawee. Otherwise than on demand means a date which is mentioned in the check as payable. Such, no, not possible. You want to delay the payment, put it post-dated. That's it. In which case, he can't present it. He have to keep seeing it, framing it, and looking at it in the thing. Then finally, on that day only, he can present it when it is mentioned. On which date the banker has to pay, provided there is money in your account. Obviously, you will direct a banker only if he owes you money. Simply you tell, or there should be a facility by which he has agreed to lend you. For example, he has given you an overdraft and he says up to 5 crore. If you issue checks, I will honor it. Then he has to honor it. Okay, which is why they will say funds insufficient. Suppose a check is issued and the money is not in the bank. They will return the check to the payee, not to you, to the payee, because that is a very, very important document, sir. It's a dishonored check. They will clearly send check returned, and they will give the reason. They will say insufficient funds. In case they have given you a 5 crore limit and you have drawn that fully, they will say exceeds arrangement or exceeds arrangement. That means beyond, he has gone beyond his limit, like that. One of the important things as a CA, financial manager of a company, you will do is call the banker and beg. You will have a trusted lieutenant who will go to the bank at 11 a.m. in the morning and sit in front of the bank manager and say, sir, pass the check, sir, pass the check, sir. He will say, no, Vengappa, where is the money? Limit exceeding, sir. Then he'll say, sir, what is sir? Check credit will come, sir. It will come, sir. And then, sir, we are expecting transfer anytime, sir. Please pass this check, sir. This is one important job that finance managers have to do or have people to do, because that is your skill. Okay. If you allow that check to be dishonored, gone. Okay. So this is all part and parcel of your job, future job as a finance manager. Be prepared for it. The pressure, the stress. Morning, 9 o'clock, 9:30, pressure starts till 11:30, 12. All the checks are cleared. You have your first cup of tea and then you start your job, the real job. Okay. So check in the electronic form means a check drawn in electronic form by using any computer resource and signed in a secured system with a digital signature, with or without biometric and asymmetric crypto system, blah, blah, blah. Don't worry about all the definition. Okay, point is simple. This is nothing but online payment. You know it by another name, NEFT or RTGS, same thing. A check drawn in electronic form, meaning what? By using a computer resource. For example, I have my bank app here. So if I want to transfer money to my wife suddenly says, send me 20,000. Okay. Immediately I'll go to my app and I will enter her account number and her, that's it. Immediately the system knows. I'll enter the amount to be transferred. It'll ask me, you want RTGS or NEFT? I'll say NEFT. Immediately it will go there. She will send a message, send me 20,000. Okay. Then she will blink her eye and open it. It is in her bank. I bank with HSBC. She banks with HDFC. From HSBC, load HDFC. She can spend it and enjoy her life. But it happens because of check in the electronic form. Suppose I have to give her a check. That check is deposited in her account. It will be presented by her banker. By the time she gets it, it will be day after tomorrow. Okay. So with electronic payments, they have amended the law to include check in electronic form. And believe me, there's no big fun in check in electronic form. You can't play any games with check in electronic form. When you have to pay the payment, you transfer the money. That's all. It happens instantaneously. But legally, it is still a check. The legal arrangement is still that of drawer and drawee. The drawee is your bank. You are the drawer. The payee is the other person's account. The law, the legal framework is still the same, though it is not happening in paper, but in electronic. Got it? Still, the legal relationship is the same. Got it? A truncated check means a check which is truncated during the course of clearing cycle, either by the clearing house or by, not by, sorry, spelling is wrong, by. What happened now? I dictated it onto Google, what is that thing, and I forgot to correct it. By the bank, whether paying or receiving payment immediately on generation of an electronic image for transmission, substituting for the further physical movement of the check-in writing. Blah, blah, blah. I will explain to you what it is. Friends, once upon a time, when there was no computer, checks used to be cleared physically. Means what? I will send my checks to my bank, my branch. Are you able to understand? Lakhs and lakhs of people will send their checks to their banks. All these checks will be collected by each branch. Then it will be sent to the local clearing house where they will sort it. So one branch will send, let us say 1,500 checks or 500 checks. This will be drawn on various banks now. So all the PNBs will go separately. All the State Bank will go separately like that. And then based on that, it will be sent to the clearing house. The local, they will have a guy who will clear it. They will have a sorting house and then it will go to the clearing house. Where there will be a clearing house, common clearing house where they will have a ledger. So all the PNB payments will be accounted. All the Canara Bank payments will be accounted. So that day they will see how much PNB has to pay, how much Canara has to pay. They will set it off. The balance amount will be transferred. Then automatically the credits will start coming here. Before that, see, are you able to understand the unfortunate system here? They have to take the physical check. Then that clearing house will send it to that bank. That bank will then see whether the balance is there. Then they will reconfirm. And then it will come back to the clearing house. They will adjust it. And then information will come to this bank. Payment has been given. It will take 2 days, 48 hours for this to happen. Okay. How to shorten the cycle? One important problem here is physical movement. Only with the checks have to be carried. So what they said, when computers came, they said, do not send the physical check. Take an electronic image, for which they had extraordinarily beautiful software. So all the checks will be inserted in the branch itself or in a central area where it will be photographed. And thereafter, only the photograph will be used for clearing. The physical image movement will not be there. Only electronic image will be used for transmission. Okay. In fact, that electronic image will be retained. And you can even see some advanced banking software. They allow you to see your check. Because once it is scanned, they keep it. So any check, if you click on the check number, the original check signed by you and cleared will be coming on screen. You can see that physical instrument. Finally, the physical document can be destroyed also. Right? So to prevent all that, they said, take electronic image and use it for clearing. Do not use original physical check. Today, that is how it happens. Right? A self-check has only two parties. Can we come to self-check a little later? When we come to blank transfers, I'll talk about it. Self-check, I'll talk about it. Oh, Vedant, great. I'm so happy that you are there and understanding. Sorry, because I love you because you keep asking to repeat now. So this time I honestly believe that this is a little confusing. That is why I thought I will repeat it myself instead of you asking me to repeat. Thank you, Ji. Bounced check, last slide. What happens to a bounced check? Dishonored check. What you can do to that fellow? Punishment that can be given. I will tell you finally. That will be the last point I will tell you. You are not know. Sir, any instrument only a creditor will be able to endorse or not a debtor? Don't use the word creditor and debtor from now on. Only for the sake of understanding, I have told you debtor, creditor, blah, blah. Now onwards, stop using the word debtor, creditor and all. Start using the word drawer, drawee, payee. Got it? Use the word drawer, drawee, payee. Who can endorse? Payee can endorse. In this case, Lakshman is the payee. It so happens in your language, he is the creditor. But in my Negotiable Instruments Act language, he is the endorsee. He is the payee, endorsee, payee. I'm sorry, payee, endorser, payee. So payee can endorse. Got it? Ravan is the debtor, but don't confuse like that. Here in this case, creditor is Ram. Ram cannot endorse. Ram's creditor is Lakshman. Lakshman can endorse. So, Supradaji, do not use the words debtor and creditor anymore. For understanding this diagram, we use the words debtor, creditor, etc. Negotiable instruments language, use the terms drawer, drawee, payee. So who can endorse? Payee can endorse. When he endorses, the subsequent endorsee becomes the payee. He can endorse. He becomes payee 2. Endorsee, payee 2. Endorsee, payee 2 can become endorser. And so on and so forth, unlimited. So, don't use the words debtor, creditor anymore. Use the word right. For promissory note, use the word maker, payee. For bill of exchange, use the word drawer, drawee, payee. For check, if you want, use the word drawer, banker, payee. Instead of drawee. Why? Because check is drawn on a specified banker. That will make our conversation easier. Abdul, you are really great, man. Ultimately, you are going to become a great chartered accountant. That much I can see. Using NEFT, RTGS, UPI, you are frightening me, man. Struggling, shivering. All these abbreviations are making me shiver. Okay. Are you a Tamilian? No, sir. I'm Telugu. Okay. I was born and brought up in Tamil Nadu. So I'm more fluent in Tamil. Okay, sir. Tamil is not my mother tongue. This is a check. Just for your information. Okay. You know it very well. You've seen it, so I don't know how to tell you that. Do you see? Pay. So this is a unconditional order directing a specified banker, HDFC Bank, to pay a certain sum of money to a certain person or to his order or bearer. Check can be made payable to bearer. Only exception. Bills of exchange cannot be made payable to bearer, but though check is a kind of bill of exchange, it can be made payable to bearer. This is the so-called self-check. Okay, Tarsius, what is your mother tongue? That is how I'm becoming very curious. Your name is very funny and not funny, strange. Tharcius. Sounds very Greek. Okay, more like, very Cassius, Roman name. Yeah, more Roman, not Greek, sorry. It's more a Roman name. Cassius, like that. Tarsius. So what are you? Are you from Goa? I don't know. Or from Bombay? Or from Surat? Where are you from? Okay. Truncated check is like a cancelled check. Okay, whatever. Now, sorry, I was just joking, Tarsis. I'm a Tamilian. Okay. Tamil is my mother tongue. Just joking. How does language matter? When heart to heart speaks, language is not important. Okay. If you can understand the language of the heart, the language of men is no longer relevant for you. But it's good to use a language that all of us can understand. Asan language, like English or something that people can understand. I wish I could speak to you in Hindi, but I'm not able to. My failure to learn that language at an early stage in my life. Chalo. Now moving on. Somebody was talking about self-check. See, in this case, what is the self-check? Pay, self, or bearer. Rupees so-and-so, sign. That becomes a self-check, date has to be put. Now, what does that mean? It means this piece of paper is very dangerous for you. Why? Because once you put pay self, right, and you sign it and send it, then anybody can go present it and get your get. But when you say pay self, immediately you have to turn it around and sign, because who is going to pay you? Who the banker is going to pay? Who? You. By reversing it and signing it, it's called endorsement in blank. What you're doing it is you are making payable to yourself. You are the drawer. Please listen to me carefully. In a self-check, what you are doing, Oh, wonderful. Darcy is great. I'm so happy to know you are a Tamilian. Okay. Great name, but born and brought up in Mumbai. Great. Nice to know you, Mr. Darcy. Coming back to the point. I'm issuing a self-check. What I'm doing, I am the drawer. I'm putting pay self. When the minute I put pay self, I become the payee. Right? So I am the drawer, I am the payee. But as you know, I cannot also be the drawee. Therefore, HDFC Bank is the drawee. Now, who is payable to me? Now, I want it to be payable to bearer. Therefore, what I do immediately, I turn it around and I sign it. That means what? It is no blank endorsement. You can take it and present it to the, bank. The bank will simply say, sir, please sign it and give it to us. Once you sign, that's it. They will pay to you the bearer. That means this check is a dangerous instrument. Why? Anybody can take it, present it to the bank, and take that money and run. So while issuing self-checks, be careful. Blank check is even more dangerous, where you don't put any name. Blank check with only signature. Oh, wow. I would love to have such checks. In fact, sometimes, people I give you a blank check. What does that mean? Blank check means it should be signed. Except signature, nothing should be there. What a beautiful thing, no? If you have it, you can put your name, put 10 lakhs, 1 crore. And then so long as money is there in that fellow's bank, you can put any amount. Put today's date, take it to the bank, present it, and get. But see, in India, because of money laundering and all, above 50,000, they won't give you in cash unless you give a PAN number. But if you give a PAN number, they'll give that also. But if you go there and ask for 5 lakhs and all in cash, the banker will say, definitely, sir, please come into my cabin, have a cool drink. And while you are drinking the cool drink, you'll go and inform the income tax people, or better still, the enforcement directorate, who will come and ask you, what is this? Why are you taking 5 lakh cash? Etc. The banker is allowed to ask questions for that. The banker is empowered to demand you. Later on in final, when you come, you will be seeing something called Prevention of Money Laundering Act, where the banker has the right to ask you. You are drawing 5 lakh cash. He can ask you and you have to give him a reasonable explanation. Okay. For example, I'll tell you a real example. I was purchasing a house in Coimbatore, where there that fellow was saying, I want cash, I want cash. I said, Baba, even if I give you cash, the amount is mentioned in the sale deed. Why are you taking cash? I want cash, I want cash. So I went to my banker HSBC in Coimbatore. I told them, Baba, one fellow is asking for cash, I need. So they said, what is the purpose? I showed them the sale deed. I said, as per the sale deed, I have to pay him 70 lakhs. I've already paid him 50. Now I have to pay him another 20. 10 lakhs check I am giving him. 10 lakhs that fellow wants cash. I'm giving him cash. But it's all accounted. I'm going to show it in my balance sheet. And that fool also will have to show it in capital gains because he has to show minimum 50 SICA value. Now it is well within that value only, like that. So in a way, it became good for me. I'm saying you can draw like that and give, but normally not a good idea. Yeah, it could happen in movies also. So self-check means money will be given only to account holder. No. Self-check means it is payable to self. It is not crossed. Only when it is crossed, it will be given only to account holder. So that's what I said now. Put self and then reverse it and sign it. Now it becomes payable to bearer. If you put self, then you have to go in person and take the money. See, the idea of a self-check is you want to draw cash in there. That's all. When you want to draw cash, instead of putting self-check, you can put pay cash also. Nothing wrong. Pay self, pay cash. Then you sign and give it to him, take the money and go. You sign and give it to somebody else. That gentleman can go take the money and go. Nothing wrong. Okay. Yeah. Everything you have to mention why you are depositing more than 50,000. With PAN only you are taking. Form 60 is dangerous. Where you are saying you will be in trouble if you give. Rather, you give your PAN number and go. Truncated check is different from cancelled check. Truncated check is the electronic image of a check. Don't confuse the word truncated. Cancelled check is totally different. Where I issue a check, then I call it back and I cancel it. Cancel check is not a big deal. See, or maybe what happens now, you start writing a check. Sometimes that happens to me. That is why I never write a check. The secretary only writes the check. She prepares the thing and I only sign. Because I always think my mind is always wandering. So I'll write something nonsense I'll write. So I will never write a check. But suppose you're writing a check, I make a mistake, immediately I'll cancel it. That is called cancelled check. Okay. The truncated check is totally different. It's a valid check, scanned image used in clearing for the purpose of clearing. Okay. Now we come to self-check is always cashed at the counter. You are confusing with the crossed check. See, a crossed check will be payable only into the account. Self-check means money will be given only to account holder. No. Once you put it self, now it becomes bearer. If you want it to come only to an account holder, not necessarily. Self-check can be made payable to bearer. I told you how to do it now. You make the check payable to self, turn it around and sign it. Now it can be paid to anybody who presents the check. Bearer will get the money. If you want proper bearer, then pay cash. This is the way you prepare a bearer check. Pay self, reverse, sign, give it to Munsami. Munsami will get the money by presenting it in the bank. Okay. His name need not be anywhere. Finally, when they give the money to him, they will ask him to sign. He can send Munsami and take it. Nobody can say why. Because so long as he signs and goes. That's all. Above 50,000 only, they'll ask for PAN number and all that. So, self-check is cashed at the counter, always. Yes. But one more thing. Today, even though it has some value. For example, sometimes some local artisan will come, some carpenter will come. Fellow will tell him, I'll pay only by check. No, sir, I need cash, sir, like that. Scratches it. So what you do? Okay, come. I don't have cash. I all in money bank. So my bank is nearby. Here is the check. Self-check, turn good. Or payable to him. Munusami. Pay Munusami or bearer. Without crossing, you give, that becomes bearer check. You got it? Without crossing, you give to Munusami, it will go to, Munusami can go to the bank, take the money and run. Okay, that is bearer check. It will be cashed at the counter. Suppose you want one of your office boys to go and get some cash for you, you put self-check. Whatever you want to do, it's up to you. But if Munusami doesn't want to take the money. He wants somebody else to take the money. Then he has to turn the check, sign Munusami. Then he has to give it to some Ramasamy. That Ramasamy can go and take money by signing. That's all. Okay. See, the idea is commercial transactions become easy. That's all. These rules and regulations are made to help us to transfer money, to make payments, to settle our debts, to live happily. The minute we disobey these rules, the minute we dishonor checks, the minute we give check without money, we are violating certain commercial rules. It's not a good idea. As a member of the Institute of Chartered Accountants of India, please, we should not violate these rules. Friends, 3 generations, of course, my grandfather and I, till date, we have never dishonored checks. I have issued crores and crores of checks. I have never dishonored a check. How? My grandfather taught me the lesson very simply. He said, if you don't have money in the bank, don't spend it. Don't spend money if you don't have it. Don't aspire or don't desire for things for which you cannot afford. If you cannot afford it, don't buy it. Why buy it and then unable to pay, don't do it. So the minute we are clear now, we will never dishonor checks. Only once, a bank called Times Bank, they dishonored my check for 50,000 rupees issued to my aunt. And my aunt, took great pleasure in calling my mother and telling, your son's check has been dishonored like that. But of course, in a good way, she said, Shrikant's check will never be dishonored. How it got dishonored? When I heard about it, I felt so ashamed. I went to the bank. I asked them, what is the issue? By some mistake, they have done it. I made the banker literally give me a letter of apology. They said, sir, please, we'll let them present, we'll honor. I said, that is not enough. Write a letter of apology in your letterhead and give it to me. They wrote a letter of apology. And that letter I gave it to my aunt. I said, my check cannot bounce. Okay. If it is bounced, then some mistake with the banker. I still remember. Thereafter, the Times Bank itself got closed. Useless bank. And they got acquired, I think, by ICICI Bank or somebody. And HDFC Bank acquired them. Okay. Useless bank, the Times Bank. So, checks are of 2 types. Open check, crossed check. A check which can be presented to the banker and can be paid at the counter of the bank is called open check. That means uncrossed check, payable to self and endorsed, or payable to named person, but not crossed. That is called an open check. Okay? Crossed check. When a check bears across its face, not right in the middle, but in the top left-hand corner. If you cross it right in the middle, it's a cancel check. Don't do that. On the top left-hand corner, in the corner, you put 2 transverse lines. Transverse means diagonal, slanting lines. So on the top left-hand corner, if you put 2 diagonal lines, nothing, just 2 transverse lines, it's called cross check. The minute you cross the check, it cannot be cashed at the counter. The minute you cross a check, it cannot be. No, sorry. When the minute you cross the check, it cannot be presented at the counter. 1 second. Earphone. Sorry. I'm so sorry. So when a check bears 2 transverse lines, it cannot be cashed at the counter. It can be presented through banker and it will be paid only into the account of a person. When it is simply crossed, general crossing, it can be paid into any bank account. But it can be paid only through bank. It cannot be paid across the counter in cash. Please understand. So crossing of a check means an instruction to the banker, that is the paying bank, that the payment is not to be made at the counter, but through bank. So a crossed check will be honored only if presented by a bank in the normal clearing process. So you have to take that check, present it to you, give it to your banker. Your banker will then present it to my banker, and my banker will pay, and your bank account will be credited. This is the process. It can happen through clearing, or it can happen through electronic fund transfer. Even in electronic fund transfer, clearing is happening because when I give the instruction, it goes to my banker. Then it goes to your banker. Then your bank software will come to my bank, and my banker will check the account and pass the check and give the money to you. But since they are all connected through a common software, it happens almost within half an hour. Maximum half. So it depends on the bank. Some banks are having stupid software. It takes almost one day, evening only it will get credited. My bank, immediately, if I transfer it to you, it will come to you. Matter of, I transfer the money and I will call you, you will have the money in your account. Okay. That is the speed at which I like to clear. Because see, why keep people pending? Why keep money pending? Okay, is the point. This was again a lesson taught by my grandfather. In fact, my grandfather used to be so clear about making pay. He was an ordinary school teacher. But when he got his salary, he will take separate covers. He'll put the rent in one cover. He'll put the provision merchant car payment in one cover so that my grandmother can take and give it. Everything will be ready. On the first of the month, once he gets the salary, everything will be done. Like that. So he used to even say, if at all I die without making any payment, check in my, they carry the pal. In our case, 4 people will carry the body now. Check in that. Your cover will be there, take it and go. Even if I am dead, my payments will be honored. So you might think that I'm putting too much importance to this type of behavior. I think it is very important. Because if we are dishonest in financial matters, then everything is lost. Being chartered accountants, we should be very, very honorable in financial commitments. And we should also encourage our clients to be honest and honorable in this. And we should also encourage our employers to be honest and honorable. There are many types of crossing. Vedant Vora is asking a question. Before I go into this topic, let me answer that. Bearer can enforce the self-check. You are correct, Alok. Bearer can encash self-check provided when the check is payable to self, the account holder to sign on the reverse. Then bearer can encash a self-check. Okay. Actually, what happens is a self-check is payable to the account holder now. Now, when the account holder does not want to take the payment, he wants somebody else to take the payment. He has to reverse it, endorse it in blank to a bearer. By not mentioning anybody's name, what happens? It becomes an endorsement in blank. Such a self-check can be encashed by the bearer at the counter. Vedant Vora says, sir, but what is the difference if I didn't put the 2 lines? Ultimately, it will also result in debiting me. Yeah, it will. See, if you don't put the 2 lines, it can be paid to any person whose name is mentioned there or his order. Okay. So in those cases, your account will still be debited. See, when you put cross, what happens now? Bearer cannot claim it. Only the person whose name is mentioned through his bank, he can claim it. That way it protects you. You don't want the payment to go to anybody else. Whereas suppose you simply put pay Amit and you don't cross it, then somebody comes across it. They can forge Amit's signature, put their name and take it. It's dangerous now. So don't do it. So crossing is your option. Crossing is a protection for you and for the payee, so that nobody else can get the payment. Again, be very careful. Huh? Suppose it's not crossed and it is payable to a company. Okay, very difficult to take. So an employee of the company, see, the company will have check signatories. Now, one of those signatories can put the signature, put his name, and go to the bank. Then also, what he should do, he can go to the bank and he can present it and take the money and go. But in such cases, bankers will be very, very careful, because check is payable to company and the MD is coming and asking for cash in the counter. Then they cannot refuse to pay, but they have to make due inquiries and then only they have to pay. It's a very dangerous situation. Okay, there are 4 types of crossing: general crossing, special crossing, account payee crossing, not negotiable crossing. General crossing: check bears across its face 2 parallel lines with or without the words and co or not negotiable. Okay, once the check is crossed, generally it cannot be cashed at the counter. It has to be presented through a banker. So the banker on whom it is drawn shall not pay it otherwise than to a banker. So that check will be honored only if presented by one banker to another banker. That's all. Crossing has the effect of preventing the check from being cashed at the counter. Simple general crossing. Special crossing. where the lines of crossing, where the name of a banker, then only that banker can present. That only that payment can be obtained only through that banker. Okay, such a definition is there in the Act, but in my life, I have not seen special crossing. In my life, I have not seen special crossing where specifically the name of a banker is mentioned. No, okay, I have not seen special crossing. Right, sir? So it is there. Don't break your head over it. It means that when it is specially crossed with the name of a banker, that check can be presented only through a banker. It becomes a double protection for the payee. Some other banker also cannot present, only this banker. But though such a definition is there, personally, I have never seen it being done. But this is regularly done. I do it regularly. Account payee crossing means I put two transverse lines, and within those two transverse lines, I write account payee or account payee only. Once I do that, it becomes account payee crossing. Account payee means that check cannot be endorsed. That's all. I give it to you, put your name and put account payee means it can be paid only to you. If I put Pranay Vasishta, pay Pranay Vasishta 1 lakh, and I cross it and write account payee, it can be presented only by your banker, and account of Pranay Vasishta only will be credited. No other person can present it. Very great protection for the payee. Okay. So invariably, whenever I issue a check, I always make it, unless it's a bearer check, in which case I won't cross it at all. But if at all I'm crossing it, I will always put account payee only and give it. Okay, so I will prevent further endorsement of the check. Not negotiable crossing. In addition to the two parallel lines, we write not negotiable. A person taking a check cross generally or specially bearing not negotiable shall not have and shall not be capable of giving a better title to the check than that which the person from whom he took it after had. Please understand, account payee crossing, you cannot endorse. Please understand the difference. If you understand the difference, you will easily understand what I'm telling. Just listen. Account payee crossing, whosoever name is mentioned as the payee, not draw, pay, so-and-so. It can be paid only into that gentleman's account. But if it is not negotiable crossing, you can still endorse it, but the endorsee will not get better title than you. If I give an example, you will understand. Later on, holder in due course, you will understand better. See, suppose I have received a check validly. It is payable to Srikanth, not negotiable crossing. I can still endorse it to Pranay Vasishta. Got it? Pranay Vasishta takes it from me. Right, sir? Now, somebody else forges Pranay's signature, puts his name there. Some donkey puts it. He forges Pranay's sign and he puts his name there. Now, this is a valid endorsement as far as another person. So, some other third party, he gets it from Pranay Vasishta. What does it say? He has forged Pranay Vasishta sign and put his name. That fraud fellow transfers it again. That new endorsee, will he get good title to the check? No. He will have the same title as the person from whom he took it. So the fraud did not have valid title. Now, that same invalid title only the subsequent endorsee will get. Later on, when it is presented to the banker will dishonor it for forgery. Okay, if he actually he won't. When we come to protection of banker, you will see that. Because as far as he is concerned, he will check if signature is correct. Signature is correct of the original account holder. That's it. He need not bother about all these endorsements, right? But Pranay Vasishta will tomorrow file a suit, fraud, in which case, in that suit, he will include the subsequent endorsee also. Because he is not getting a better title than this guy. Got it? You will understand it better when you come to holder in due course. Who may cross? A drawer may cross it generally, especially. A holder, that is anybody who gets the check, which is uncrossed, can cross it. A check which is generally crossed, he can make it account payee or restrictively crossed. He can add the words not negotiable, etc., to protect himself. Banker may cross an uncrossed check to himself so that it can be presented only through that banker. Okay. But with all section 125, only two types of crossings are used in a general crossing, that is and co, and which means it can further be endorsed, but it can be paid only through bank, or account pay crossing, where it can be paid only to the account of the person who is mentioned as pay. Only these two types of crossings are 99.9% used. Rarely I have seen a bank special crossing. Rarely I have even seen a not negotiable crossing. I've seen account pay. I've seen normal general crossing. Okay. Now, the time now is 7:45. Let us have a small break for about 10 minutes. Right, sir? Small break, then we will continue. I'm sure you find that this topic is quite interesting and not as complicated as sometimes it looks when we read theory from the material. And we are going to enter into more exciting areas as we get into the dynamics of negotiable instruments. Right now, we are still in definitions. We're going to get into the dynamics, the rules and regulations. Okay. So small break for 5 minutes. Nisargji, small break. Nisargji, small break. Nisarg? Welcome back from your well-deserved break. So let me see, some questions are there. Let me see. Even if it's crossed, one second. Yeah. Not negotiable can be endorsed any number of times, but when it is endorsed, the endorsee will not get better title than the endorser. If the endorser has title is bad, the endorsee, so subsequent endorsee will also get. Be careful. When you come to holder in due course, you will understand what it means. Okay. So when the holder in due course is the endorsee, he will give better title to subsequent people. We'll see that. Okay. Just check out. Keep it in mind. But basically, if it's not negotiably crossed, and subsequent endorsees will not get better title than the holders. I'll give an example later. When you go to holder in due course, you will understand it better. Yeah, it's a very interesting topic, but you have to use common sense and practical. It should not be theoretical. It should be practical. You should think of yourself as a merchant. You should think of yourself as a commercial man, and think like that. Don't think like a student. Okay. Difference between different types of, no, sir, madam, I cannot repeat, madam. It is not the same. You are not listening when I am explaining. That is the problem. Listen, then you will understand. It is not the same. If it is the same, why I will explain it differently. One more time I am doing it, Supradaji, and I want you to confirm that you have understood. All seems to be same, but seems to be same. It is not the same. Madam, general crossing, two parallel transverse lines. What happens? It cannot be presented in the counter. It cannot be cashed. It has to be sent to the bank for collection, presented by the banker. Only then it will be paid. It can endorse. It can be endorsed any number of times. Okay, got it? Clear? This is the basic crossing. The minute you put two transverse lines, you are instructing the world that this check cannot be taken to the counter and cashed. It has to be given to your banker, and only banker can present it for payment. My banker will pay only to a banker who presents it. Madam, this is general crossing. Clear? Now, special crossing, if within that parallel line, name of your bank is written, how it can be same as general crossing? Here, between the parallel lines, name of bank is written. Who will write it? Some donkey banker will write it, so that it can be presented only through that banker. No other banker can present it. Only that banker can present it. Rare casing. This is a rare case. I have never seen a special crossing. The effect of special crossing is, it is payable, Srikanth issuing check to Suprada, Suprada giving to Canara Bank. Immediately Canara Bank puts Canara Bank. That means what? This check can be presented only by Canara Bank, no other bank. Got it? That's a protection for that bank. That's all. So definitely special crossing is different from general crossing, madam. How it can be the same? It cannot be. Now, very, very important crossing. 99.9% this crossing is used. What is the meaning of this? You put two transverse parallel lines. Means make it a general crossing or even a special crossing. Along with that, you write account payee. For example, account payee, Canara Bank. Means it's a account payee special crossing. What does it mean? It can be paid only to Suprada, who is the account name, and that too only to Suprada's bank account with the Canara Bank. Special crossing, account payee crossing. Suppose it's not a special, it is generally crossed. That means what? Two parallel transverse lines. And I put within that account payee. It means that is all. This account payee crossing cannot be further endorsed. Somebody was asking about further endorsement. That is Pranay Vasishta. Now, this account payee crossing means I am putting up an endorsement. No more endorsement. I am paying it. I am giving a check to Suprada. Account payee means what? It can be paid only through banker, and that too only into the account of Miss Suprada. Nobody else. That is the effect of account payee crossing. Now, is that not different from general crossing? General crossing can be endorsed. Suprada can give it to somebody else, can give it to somebody else. Finally, that lady or gentleman should present it only through the bank. General crossing. Whereas this is account payee crossing. where it will be paid only into the account of the person who is the payee, account to payee. Madam, now Suprada, you tell me, is it the same as general crossing? How it can seem the same? Last, not negotiable crossing. With the two transfer lines, you put not negotiable. What happens? The signing, the lawyer is telling, Baba, I have signed. But if this check is forged or this check is done some nonsense, the final guy will get the same title as the bad title that the endorsee has. That's all. Nothing else. So, though it seems the same, I'm sorry to use that word again and again. I hope now Ms. Suprada is clear that they are not the same. They are different. Okay. And I hope the difference is clear. Now, you ask me specific question, I will answer. I have repeated completely once. And I have explained to you how they are different from each other also. Now, if you have a doubt, you have to ask. Okay. No, the point I'm making is, it cannot be the same. Nah? Definitely, account payee is different from general crossing. And one more thing I'll tell you. 99.9 in my life, I have seen only general crossing and account payee crossing. I have never seen special crossing, not negotiable crossing. But theoretically, in the book, textbook, it is there. Therefore, we are studying it. Okay. Sorry about being a little tough on this, but when students ask me to repeat, no, I don't mind repeating, but I would humbly request them to also listen, because I'm taking so much effort to make it interesting and slow. Okay. So I know it is a little tough. I'm not saying no, but now you got it. Thank you, Mr. Brother. So can we say non-negotiable crossing can be endorsed, but in case any endorsement is different, then it will pass by human law. Exactly. Srishti got it. Negotiable crossing, not negotiable crossing can be endorsed. Correct. Any endorser has a defective title, then the title passed by him will also be defective. Beautifully said. Okay. You have got it, Srishti. Account payee and not negotiable cannot be endorsed. Account payee cannot be endorsed, but not negotiable can be endorsed. That is the difference. Account payee cannot be endorsed. If it is endorsed also, if it presented, it won't be paid. Why? Because it will be paid only into the payee's account. So if it is endorsed, it will be waste. It cannot be endorsed. But not negotiable can be endorsed. General can be endorsed. Special also cannot be endorsed because it can be presented only through that bank. So account payee and special cannot be endorsed. General can be endorsed. Not negotiable can be endorsed. But once you put not negotiable, if the title of the endorsee is defective and he further becomes endorser, that defective title will be further passed on. That is all. Srishti has put it very beautifully. Okay. So, brother, I can't explain better than this. If you're still getting confused, what to do? I will cry. Okay. Check payable to order. Where a check payable to order purports to be endorsed by or on behalf of the payee, the banker is discharged by payment in due course. Got it? It purports to be endorsed by or on behalf of the payee. Means self-check. When I sign in the back, okay, I am endorsing it. I am the payee, I am endorsing it. I give it to Suprada, okay. Check is payable to order. It is not crossed account payee. It is crossed normally or not crossed. Then Suprada signs it and says, pay Pranav, or just writes Pranav Vasishta, sign. It can be claimed by Pranav Vasishta. Pranav in turn, Abdul, Pranav signed. Then Abdul can present it. If it is crossed generally through banker, if it is not crossed at the counter. Got it? Once the banker pays in due course, the banker is discharged. When it is endorsed, the words used are purports to be endorsed. Why purports? Because, my dear friends, think carefully. I am the banker. I will have the account holder's signature in my database. How I will have endorser's signature? Soch kar dijiye, please. How I will have endorser signature. So if endorser is forged, how I will know? Yeah? Some donkey comes and says, I am the endorser, and I see the endorser sign, some endorser is there. That endorser is the payee or an earlier endorsee. Good. Then I believe you, I will pay you. I'm in ordinary course. In due course, I have paid. Now the dryer cannot come to me and say, who told you to pay to that guy? His sign was, his sign was forged. How do I know his sign was forged? If your sign was forged, I would have dishonored it. I would have returned it. Why? Because I know your signature. I have it in my database. But humbly requesting, soch kar dijiye. I do not have the signature specimen of any endorser. I have to believe that this is their sign and pay. Once I pay, that's all. I am discharged. Any dispute is now between the parties, not with me. Okay, you got it? The banker is discharged. Right, sir? As regards bearer check, the rule is once see one more thing. Why this 85(1) is there? So that banking can happen peacefully, boss. Every time I'm getting an endorsed check, if I have to verify everything in the world, I cannot do it. When the check comes to me, I see payee signed, I check the signature, correct, check is clear, turn it around, Pranav Vasishta, agreed, Abdul is presenting Abdul's account, that's it. Now, suppose the check is not crossed, Pranav Vasishta can cross it and then endorse it. Then Abdul can say account payee and then present it. Only Abdul can present it. Nobody else can present it because it is account payee now. Got it? Nobody else can. With Abdul, endorsement stops because he has put account payee there. Got it? As regards bearer check, the rule is once a bearer, always a bearer. Banker gets a good discharge by payment in due course of the amount on a bearer check to the holder of the check. I don't care who he is. His name need not be anywhere on the instrument. It's signed in, it's endorsed in blank here. It's payable to bearer. Bearer comes to me and says, pay. All I have to do is take the bearer signature. Nowadays, what the bank will do, I'll tell you, to be on the safer side, they will take the bearer's mobile number. That too, they cannot ask. Nowadays, they ask and we give. To be on the safer side, they take. That too, if it's some nonsense mobile number, we do not know. We simply have to take the payment and go. Because it is payable to bearer. Any man can walk in from the street, present the check, so long as the account holder's signature is correct. The check will be honored. It cannot be dishonored. Banker cannot delay payment for more than 5 minutes. If he does that, the banker is liable to everybody, to the guy who presented, to the holder, to the dryer, everybody. Because suppose the check is dishonored, the dryer also will sue the banker. So who told you? I gave it to bearer. Bearer can give it to him like that. So once a bearer appears with the check, the holder appears with the bearer check, paid to him. Similarly, payable to order, the banker simply has to pay and he is discharged. Got it? This is called protection of liability of a paying banker. Where a check is crossed, generally, the banker on whom it is drawn shall not pay it otherwise than to a banker. Clear? Where there is a whole point of crossing now. It will be presented only through a banker, any banker who presents it on behalf of the endorsee or the payee or whoever it is. Where it is specially crossed, then only that banker whose name is mentioned should present it, and the paying banker should only pay to that bank. There is only extra dimension for special crossing. In the case of cross check, where the banker on whom a cross check is drawn has paid the same in due course, the banker paying the check, and in case the check has come to the hands of the payee, the drawer thereof shall respectively be entitled to the same rights and be placed in the same position as they would respectively be entitled to and placed if the amount of the check had been paid to and received by the true owner thereof. Means, once a check is honored by the banker, all parties are discharged. You can't come and sue any of us. For example, I gave a bearer check. I gave a bearer check to you or to Mr. X. X took it. It's a bearer check, time bomb. He should immediately rush and take the cash and go. Instead, what that fellow does, he keeps it in the puja room. Why are you keeping my check in the puja room? He keeps it in the puja room. His servant gets hold of it. It's a bearer check, Baba. Payable to bearer. Okay, so he goes there. He goes to the bank. He forges it. See, it's payable to, let us say, Mr. X. Now X is keeping it in the puja room. X's servant sees it. He takes it. He forges the sign of X. And he comes to my bank. he presents it. My banker pays him. That's all. Once my banker pays him, that servant takes the money and runs away. 5 lakh he takes, and that's it, he'll run away. Now, X cannot come and catch my collar. I'll say, look here, what is your problem? I signed a check and gave it to you. Now, no, it got forged. Boss, you have to keep it safely. If the banker has paid it, then all of us are put in the same place as if the check has been paid and received by the true owner. Who is the true owner? X. Even though we paid it to your servant who forged your signature. Now, what can X do? The only remedy available to X is criminal action against the servant. Go to the police station, report the servant, give his ID proof, show his photograph, let the police arrest him. If the money is with him, God is great, you take it. If not, you file a civil suit for recovery or wait for the criminal case to get over. That is all. You can't come to me or the banker or any subsequent NRC. Sorry. Okay? All of us are discharged. That is the sum and substance of section 128. Though the words are a little complicated, this is the meaning. Endorsed, which is the correct spelling? Both are correct. So I may use endorse in one slide, I may use endorse in another slide. Whether I use endorse or endorse, it has the same meaning. Okay. So I would like to be uniform in spelling. Ideally, it should be endorse, I-N-D-O-R-C. But in America, endorse is also valid. In Britain, it is endorse. So in the Negotiable Instruments Act, you will find endorse. But normal usage, even endorse is correct. Americans use endorse. Britishers like us use endorse. So now I am both British and American. I use both. Okay. Doesn't matter. Any banker paying a check cross generally, otherwise than to a banker, or a check cross specially, otherwise than to the banker to whom it is crossed, being a or agent for collection being a banker, shall be liable to the true owner of the check for any loss he may sustain owing to the check having been so paid. This is not a protection. This is the exception for the protection. 128 is protection. 129 is, you see, I have crossed it. Then why you are not paying it to the banker? Sorry. That banker has specially crossed it. Why you are paying to some other banker? Okay. So in these cases, the paying banker is not protected. He will be liable to the true owner of the check. Got it? But believe me, in banking circle, never it will be paid. The minute it is crossed, simply they will give and say, Baba, account pay crossing, I can't honor, go. That's all. Okay? That way bankers are also very smart. See, ideally, this topic should be taught by a banker. But still, why I am sort of able to tell, because I have about 5 or 6 great senior bankers with whom I used to interact a lot for the last 15 years. From them, I have understood a lot about these things practically. Okay. So that knowledge only I am also trying to share with you. Right? How stop payment works? You instruct your banker to stop payment, that's all. It is not dishonor. Okay. When you instruct your banker to stop payment, they will say refer to drawer. If at all, before the check is presented, you instruct the banker to stop payment, then in writing, they will stop and they will return the check to the other party saying refer to drawer. That is called refer to drawer. That's all. That guy will come back to you. Obviously, you would have stopped. If you are stopping payment with the intention not to pay, that's a different thing. It's a dishonor only. Okay, they can again present it and ask the banker to pay. If the banker says insufficient funds, then they can go to court. Okay, but if usually bankers will not stop payment when there is insufficient funds. They will simply say, sir, there is no money anyway. I will return it as insufficient funds. But if funding is there and you say refer to drawer, you stop payment, maybe some dispute is there, they will say refer to drawer and you come. Not a good idea again. Oh, Aslam is coming in with a question. Instead of sharing his wisdom and knowledge, he's actually asking a question. Let us see. In case any, the title again, house are special not account pay and okay, it's a non-negotiable clausing can be endorsed. But in case any endorser has a defective title, then the title person correct. Srishti is correct. One second, account pay and not negotiable. No, I answered that. How, sir, special not endorse if some person want to endorse it to the person having bank account? No. Abdul, go to the corner, get confused and come back. Go to the corner, get confused and come back. Okay, that's all. I have given my answer. Believe it, take it, don't take it. It's your problem. I won't enter into an argument with you. You go to the corner, get confused and come back to the class. You continue to listen to what I'm saying. This question I am not answering. Specially crossed means it can be presented only by that banker into that account. It can. So, okay, if you want to, you play all these games. That's why I said smallest area. That area you are taking and asking questions. See, most useless area in the topic you are taking asking questions there. You are really great at it. Don't waste your time. There are so much knowledge to be acquired for the exam. Use it for acquiring that knowledge. Okay. In case any general crossing check is endorsed and the title gained is defective, but then he passes it on, then will the new person who gets the check get the defective title or good title? Good title, because it's generally crossed. Okay. Then this will apply. Where a check purports to be endorsed by or on behalf of the payee, the banker is discharged by payment in due course. 85(1) will apply. Okay. He'll get good title. Good question, Srishti. Srishti, you have understood the topic. Very good. Okay. Then 85(1) will click. Again and again, reason. What did I say? Endorser ka check sign. How do I know it's forged? Anyway, if the banker pays it, it is clear. Okay. How stop him to work? Small doubt, difference between account pay and not. Abdul, when I explained to Suprada, I told account payee means it will be paid only into the account of the person who is the payee. Not negotiable. It can be endorsed. It can be paid to a person other than the payee. But both have to be paid only through bank. Please, it's not a small doubt. You are asking doubt again and again on a topic that I have covered. Okay. Clearly, I have mentioned now. Not negotiable can be endorsed, but subsequent endorsee will get the same title as the endorser. If that title is defective, he will get defective title. That is all. General crossing can be negotiated, can be endorsed. Account payee cannot be endorsed. It can be paid only into the account of the person who is mentioned as the payee. So this is the difference between account payee and not negotiable. I didn't ask that. What do you mean by that? Oh, sorry. Who asked that question? No, how, sir? Special not endorse if some person want to endorse it to the person having bank. No, sir. Usually, the special crossing, Abdul, will not be made by a person. It will be made by the banker. See, he will present it on your behalf, but before presenting it, he will put his name. You know why? Because when it goes into the clearing house, there may be confusion. So they will put it. Okay? That is why they will put it there. Usually, it will not be done by individual. Special crossing will be done only by a banker. See, here also, a banker may cross especially to himself. Individual cannot do. So, in your question, how, sir? There is a question here beginning with the word how, sir. That question only I said I will not answer, but I have answered it finally. Okay. And your English is also bad. I didn't ask, Dylan. I did not ask. Okay. Sorry, as a teacher, I am correcting you. I didn't ask the typical Indian English. Okay, don't do that. Asked itself is the past tense. How it can be? I didn't ask. It should be I didn't ask. Did itself past. Asked also past. Why? I did not ask. Okay. This is a typical mistake done by most Indians. Right? Okay, now, normally, if you pay a crossed check otherwise than through a banker or a specially crossed check otherwise than to the banker to whom it is crossed, the banker will be liable to the true owner. Payment of a check on which drawer's signature has been forged. If any drawee bank makes a payment on a check on which drawer's signature has been forged, then such bank shall be liable to the true owner. Okay. Thus, the paying banker shall be liable if it makes the payment of the check on which drawer's signature has been forged. Right. So, where the drawer's signature has been forged, their liability cannot be escaped. the banker is liable to the true owner, means whoever is entitled to get the payment. Okay. If the drawer's signature is forged, then that person, that check can be dishonored. Okay. If they pay it, then the drawer can file a suit against them for paying. Okay. Forged check cannot be honored. A banker, this is for a receiving banker. Please understand, this is for receiving. Though I put protection of liability of a paying banker, let me sort of correct it. This is meant for receiving banker. Okay, the receiving banker, once a banker who has in good faith and without negligence received payment for a customer of a check crossed generally or especially to himself, shall not in any case, the title of the check proves defective, incur any liability to the true owner of the check by reason only of having received such payment. See, the receiving banker is the agent of the presenter. The check is presented, even if it is a forged check, and it is presented and honored, the receiving banker has no liability to the true owner of the check. Okay. Now, we move on to another very interesting and very important concept. Sir, forged signature can be for account pay crossing also. No? I can take a check, forge your signature, put an account pay crossing, present it through my banker. It's also forged only. Anything can be forged now. So long as the drawer's signature is forged, it doesn't matter whether it is a crossed or open. Okay, sir? If drawer endorse bill to endorse and endorse drawer endorse. Drawer has nothing to do. Payee only will endorse. Again, go back to the diagram, bill of exchange diagram. Drawer will not endorse. Drawer will get it, draw, accepted, given to the payee. Thereafter, the payee can endorse. Drawer will not endorse. Got it? Drawer endorsed the bill to endorse. No, endorser. Payee endorses it to endorse, and endorser also endorsed it. Then how will know to drawee to whom he has to pay? Ask drawee doesn't bother. If it is payable to bearer, he pays to the bearer. If it is payable to order, he pays to the person whose name is mentioned last. If it is crossed, then he'll pay only into the bank account. If it is specially crossed, he'll pay only to that banker. If it is account pay crossing, he'll pay only into the account of the payee. That's all. With that, the drawee, the banker has no problem. Even in bill of exchange, I am the drawee. You are saying that you are the endorser, you are coming to me. I don't care who you are. Signatures are there. I will keep it with me, give it to you. That's all. See, again, you remember, when you come to bills of exchange, be very, very careful. This whole thing worked in a very close circle of people who knew each other. This is something we keep on forgetting when we talk about bills of exchange. But in check also, the banker is the drawee. He has the same. Which is why normally bills of exchange, were always done through a known group of people. They will not do it. In which case, if it is a bill of exchange, it will be presented for acceptance. Now, at the time, they will say, I'm not accepting it. I don't know who you are, get out. I don't know who the drawer is, get out. So that way, it will be a totally different story. Okay. Inchoate instrument. It means an instrument that is incomplete in certain respects. The person signing and delivering the inchoate instrument is liable to holder and holder in due course. Inchoate instrument, classic example is self-check. At the reverse, you sign it. Okay, it is blank. That's all. Whatever is the amount due, he puts it, you have to pay. You are liable to holder and holder in due course. But holder cannot recover more than is intended to be paid by the drawer. Whereas holder in due course can recover any amount on the instrument, provided it is covered by the stamp. In the case of checks, there is no stamp. Inchoate instrument is common for bill of exchange and check. Also promissory note. All the three. For example, blank promissory note, inchoate. Okay. Whatever is the amount filled up will have to be paid to the holder in due course. But the holder, meaning the person who gets it for consideration, Okay, knowing what the transaction is, to him, only the amount which is intended will be paid. You might ask me how all this will be known. In the court case, the drawee will have to show, boss, in the original transaction, I owed the drawer only so much. Okay, that money only I'll pay to the holder. Okay, but holder in due course, a third party who got it in good faith, without knowledge of the transaction between the payee, drawer, and drawee, will have to be paid any amount which is mentioned in the instrument. Basically, an inchoate instrument is an incomplete instrument. Means date is not there, amount is not filled up. Okay, but signature should be there, Baba, please. Other than signature, anything else is missing, it is inchoate. If signature is not there, see, if you take an unsigned blank check, it's only a piece of paper. You need a sign on that blank check. Then it is a dangerous instrument. Ambiguous, where an instrument may be considered either as a promissory note or a bill of exchange, the holder may treat it as either. For example, in a bill of exchange, drawer and drawee are same person. Then it can be treated as a promissory note or it can be treated as bill of exchange. It depends what you want to do. If you treat it as a promissory note, then you will wait for the date and go and present it to who? See, you are the payee. The drawer has drawn it on himself and given it to you. It's a promissory note. That's all. He is the maker and you are the payee. That's all. You are the, or else you can treat it as a bill of exchange, send it, endorse it, and the final endorser can present it, take the payment and the bill of exchange. It will be treated as a bill of exchange. Okay, it depends. Where an amount is stated differently in figures and words. If the amount undertaken or ordered to be paid is stated differently in figures and words, the amount stated in words shall be the amount undertaken. Be careful. Amount stated in words should be considered. We have another 5 minutes. I will use it to share this thought. Okay. This diagram, even you can take a photograph and keep it in your mobile. Okay, before that, let's see the questions and then come. Sir, for how long the bank keep the copy of check in the safe? I don't know, sir. I think once they take a scanned image, they can destroy it. I don't know. Seriously, I don't know is the answer. A, I don't know. B, I don't care. Because it will not affect my life in any way by knowing or not knowing. What do you say? It will not affect your life also by knowing or not knowing. Because your goal is to clear the CA exam, not CAIAB. Okay, maybe when you become a banker, then you know all these things. What do you say, Thakurji? Sir, what is the difference between holder and holder in due course? Wonderful question, but will be answered in due course. Will be answered in due course. That is in my next class tomorrow. That is a separate topic by itself. It will be my fortunate duty and your unfortunate duty to listen to me. I will tell you. Abhi to nahi. Wait. Okay. I will explain. It has to be explained. Holder and holder in due course. That's why what I have put here. See the symbol I have put. I know you are all irritated and angry with me. Fellow is not telling what is the difference between holder and due course, and he is telling holder and due course. So see the emoji I have put here. So I know you are angry. I know you are getting upset. That's why I put that emoji there. Don't worry. It's a suspense. Tomorrow it will be told without any doubt. I will explain to you in detail who is holder in due course. Everything will come. Don't worry. See here, you don't believe me, it is there. I will explain. Okay, but not aaj to nahi. Abhi, let us just look at this quick cycle. Drawer draws a bill of exchange, gives it to the payee or the endorser. The payee. The payee presents it for acceptance. Then that accepted bill is given back to the payee. Now the bill gets life. Payee endorses. Is the endorser. It gives to endorsee 1. Then endorsee 1 endorses it to endorsee 2. Endorsee 2 presents it for payment to the drawee. The payment is made. Bill is discharged. This is called life cycle of a bill of exchange. I'm sure in 8th standard you studied life cycle of a mosquito or life cycle of a butterfly. How from pupa from larval stage it will become pupa, then so on. Similarly, caterpillar, pupa, and then it will become a full-fledged butterfly. That is the life cycle of a butterfly or mosquito in zoology. Here, this is life cycle of a bill of exchange. Bill of exchange is born when the dryer draws it and sends it to the drawee. Drawee does not accept it, it dies immediately. But if the drawee accepts it, it gets life and then it goes on. NRC1. NRC1 to NRC2. Then presented to drawee, paid, discharged, close. Life cycle comes to an end. Try to remember this cycle. Whenever you are trying to understand the topic, put the topic into this framework. Put that problem into this framework. To an extent, answer will be clear and visible. Instead of putting it in your mind and confusing, put it in this diagram. That is why take a photograph of this diagram with your mobile phone and keep it with you. Whenever you are reading Negotiable Instruments Act, keep it with you, especially Negotiable Instruments, Bill of Exchange. And you Promissory Note diagram also, I hope you have taken. Both you keep it. Whenever doubt, look at it. Okay. Okay. Okay, K. No, okay, K, K. Huh? How many Ks you will put, Baba? Earlier, I used to be a little worried about this. Too many Ks. Now I know. Okay, okay, okay. 3 times you are telling. Okay. Time now is 8:35. I wish I could have completed another 10 slides. That's okay. Tomorrow we will extend the class a little bit necessary. And we will move. I will definitely teach you holder and holder in due course. COL. Maybe first I will teach this only. Okay. Thank you. Have a great evening. Bye. Good night. Tomorrow, inshallah, we'll meet. Sir. Class over, sir.